Welcome to Market Lens for Monday, July 6, 2026. Today's market map is unusually split. Japan and real estate are holding the cleanest uptrends. Metals are trying to rebound from oversold levels, and U.S. equities are still supported by major index strength, but showing more internal volatility. At the riskier end, China and crypto remain stuck in downtrends despite short-term bounce attempts. The opportunity ranking starts with Japan equities and real estate, both scoring +2 with normal volatility and supportive trend structure. Metals sit in the middle with mixed signals, while Hong Kong and emerging markets are more range-bound. U.S. equities are mixed with elevated volatility, and the weakest setups are China equities and crypto, both scoring -1.7 with persistent downtrend risk. Japan equities are in an uptrend with normal volatility and an opportunity score of +2. EWJ remains above both its 50-day and 200-day averages, which keeps the technical backdrop constructive even after a modest short-term pullback. A weak yen can still support exporter earnings, and global interest in AI-linked and semiconductor supply chains remains helpful for parts of the market. The key risks are currency-driven inflation, rate policy uncertainty, and the possibility of sharp moves around yen headlines. Bottom line, Japan still has one of the cleaner setups in today's market lens. Real estate is also in an uptrend, with normal volatility and an opportunity score of +2. VNQ is trading above both major moving averages, with positive 5-day momentum and a near-trend stretch, suggesting the move is constructive without looking overly extended. The supportive case depends heavily on stable or easing rate expectations, because real estate remains very sensitive to financing conditions. Elevated mortgage rates and uneven commercial real estate fundamentals are still important headwinds. Bottom line, the trend is favorable, but rates remain the pressure point. Metals are mixed, with mixed volatility and an opportunity score of +1. Gold remains in a downtrend, while silver is sideways but very oversold, and both GLD and SLV posted positive 5-day moves from depressed levels. That rebound pressure is notable, especially if softer growth or lower rate expectations support precious metals. But both symbols are still below their 50-day and 200-day averages, and silver's high volatility keeps the setup unstable. Bottom line, metals may be trying to stabilize, but the trend repair is not complete. Hong Kong equities are sideways with normal volatility and an opportunity score of +0.5. EWH is oversold and trading below both its 50-day and 200-day averages, so the setup is balanced but still fragile. Normal volatility helps, and oversold conditions could allow short-term stabilization if sentiment improves. At the same time, mainland China growth concerns, property weakness, and potential share supply pressure remain meaningful headwinds. Bottom line, Hong Kong is not breaking down aggressively, but it still lacks a strong directional edge. Emerging markets equities are sideways with normal volatility and an opportunity score of 0. VWO is slightly below its 50-day average, but still above its 200-day average, which creates a balanced, range-bound profile. Asian technology exposure, semiconductor supply chains, and stable volatility are helpful, while dollar strength, Fed uncertainty, and China-related weakness can limit enthusiasm. The setup is close to trend, but not showing strong confirmation either way. Bottom line, emerging markets look stable, but still need a stronger catalyst. U.S. equities are mixed with elevated volatility and an opportunity score of -0.5. SPY and QQQ remain in uptrends and above their major moving averages, helped by continued AI and semiconductor optimism. But the picture underneath is less clean. GOOG is sideways and below its 50-day average, while NVDA is sideways, highly volatile, and oversold. The index backdrop is still constructive, but leadership is not uniform, and expectations remain demanding. Bottom line, U.S. equities still have support, but the market is becoming more selective. China equities are in a downtrend with normal volatility and an opportunity score of -1.7. MCHI is far below both its 50-day and 200-day averages, even though it posted a small positive 5-day change. Oversold conditions may create rebound attempts, and strategic sectors like advanced manufacturing, chips, robotics, and renewables remain areas of interest. But property market weakness, soft domestic demand, and measured policy support continue to weigh on confidence. Bottom line, China has rebound potential, but the dominant trend remains weak. Crypto is in a downtrend with mixed volatility and an opportunity score of -1.7. Bitcoin and Ethereum both bounced strongly over 5 days, but both remain below their 50-day and 200-day averages, which keeps the broader technical setup fragile. ETF demand has shown signs of improvement, and Bitcoin's oversold condition may support rebound attempts if risk appetite improves. Still, volatility remains elevated to high, and crypto is sensitive to dollar liquidity, policy headlines, and shifts in risk sentiment. Bottom line, the bounce is notable, but the downtrend has not been repaired. Go beyond the highlights. Get the full Market Lens report in your inbox. Powerful AI-driven insights on global markets, critical news, risks, and opportunities to help protect and grow your money.